All right, welcome to the Sushi Onsen AMA, where we host projects that have partnered through the Onsen program and give them a platform to reach a larger audience. Today, we have the AMP token slash Flexa network with us to sort of give us a inside look at what they're doing. Thanks for coming out to the sushi community, guys.
Thanks for having us.
Thank you.
So, oh, sorry, I didn't mean to cut you off. So the AMP token is, from my understanding, a essentially like a collateral for a payments system. Do you want to sort of go through the ringer and sort of give everybody an understanding of it who maybe hasn't looked into it at all yet?
Should I start?
Go for it.
Yeah, whichever one of you
Okay.
wants to. Yeah, go ahead.
Sure. So I guess the first thing that we would have to mention is that there is AMP token and then there's Flexa, right? The AMP token is a collateral token that powers the Flexa network, which is basically a payment rail for payments, a digitally native payment rail for payments. So these have to be dissected. And in order to come to AMP token, I think the best way is to generally give an introduction onto what Flexa is. And so if you look at Flexa, it's basically a payment rail, right? When I talk to people and I explain Flexa to someone who hasn't done any research on it, I always start with saying that Flexa is not a wallet. Flexa is a payment rail, right? And so what is that? A payment rail is basically the infrastructure that is required in order to send payments. And so as such, Flexa is not a consumer app. It's not a consumer-facing app. It's basically like an SDK that embeds within existing wallets in order to unlock payment finality for transactions. That's kind of like the short introduction, I'd say.
Gotcha. Okay, so so do you want to sort of maybe go through the design of the system? Because I know that it's like, so you have this collateral token that is acting as the sort of like the insurance payout, I guess, if a vendor or something transactions fail.
Yeah, so the collateral, or AMP, stands by and is ready to be liquidated should it need be, which has not yet happened in the history of the network. But that's what serves as an additional layer of guarantee, such that the network can accurately boast that they protect against fraud, and merchants will get paid for sure.
Maybe something that I like to take as an example to explain how the Flexa architecture works is always Uniswap, right? So before Uniswap, when we looked at decentralized exchanges, they existed as a concept, right, like EtherDelta, but the user experience was terrible, right? You had direct order matching on chain, which was super slow and clunky, and so what it needed was an intermediary permissionless liquidity that would allow for trading to be instant, right? Suddenly I could swap instantaneously without needing to ask anyone for permission, without needing to match an order to my order, right? And that liquidity really changed the whole space in that we're in now, in such a way that decentralized exchanges, from the user experience, became superior to centralized exchanges, right? Like no KYC, no sending funds. I can do it directly from my wallet. Now that intermediary liquidity is basically the same underlying architecture in Flexa now applied to payments, right? Within crypto, we are mostly discussing payments on a layer one narrative, right? Like all the Ethereum killers trying to create massive throughput, build massive throughput in order to have thousands of transactions. But we haven't been talking about payments in a way where we add intelligence on top of basically the layer 1, which is intermediary liquidity in order to unlock finality, right? So you have transaction times, and instead of needing to wait for your transaction time to complete, right, Flexa adds liquidity in between, cuts it down to an instantaneous experience, right, for a user, and settlement happens on the back. That's basically the main architecture that is the collateral pools powered by the AMP token, if that makes sense.
Yeah. And sorry, I'll continue with this thought. I just want to real briefly say for everybody who's listening in, this is an open AMA, so if you have any questions or things that you want to ask or bring up, there should be a button at the bottom that says raise your hand, and that'll put you in a list where I'll be able to drag you up here to ask your question if you do have questions. But continuing on what you're saying there, so the value is moved instantly. So how does that work? Is it all on layer 1, or is there a layer 2 here? I from my understanding, I believe it's all on layer 1, just on Ethereum, but I might have misunderstood or misread something when I was doing some research.
If I can quickly jump in there, I think it's important to differentiate between the transaction and the clearance, right? It's something that we are not really aware of in crypto. There's a transaction, which is basically sending a transaction and then settlement on the back, right? Clearance is something else. If you use a credit card today in store and you tap your credit card, right? You as a customer, you have an instant payment experience. You tap the credit card, the POS system confirms it, you feel the sale is done. The transaction itself actually is not finished, right? Settlement happens on the background and will only settle a day later, sometimes a week later, right? Like merchants will only get their money late in their bank account. What Visa did, or MasterCard did, is basically confirming the transaction on your behalf, right? And making sure that the funds are there and that the transaction will eventually go through. So in such, the signal of the POS is not really the transaction, right? That's just the clearance. And that's something that Flexa is basically providing. It's not speeding up the transaction, right? So the underlying transaction, say BTC, or layer 2 transactions, could be faster, could be slower. It doesn't matter for the abstraction layer that Flexa provides. It basically tells both parties that transaction went through and decentralizes the risk that happens in between clearance and settlement. Does that make sense?
Yeah, that's starting to make a lot more sense to me. It's it's almost like open an open system that's designed to basically act as like an oracle for user balances that are trying to be used as like a credit line for payments, with the penalties and punishments if your transaction fails, where your collateral can get burned.
Yeah, you could understand it as an abstraction layer on top of transactions that basically takes care of interchange, communication between the wallets and the exchanges, right? And provides the intermediary liquidity that's necessary in order to make that experience seamless, right? And so the powerful aspect of that is that now, because if you look at the legacy banking infrastructure, right? If you pay with your credit card, there are like up to 12 intermediaries involved in that payment. That is because the payment infrastructure grew over time. It's like historic. It's dating back to the 1950s or even older, right? And so it's made up of siloed data, like siloed ledgers, banking ledgers, that need to communicate with each other in order to clear a payment, right? And so all of these siloed ledgers need to be maintained by third parties, right? Which is prone to fraud and makes the system really heavy and expensive. Now, the beauty of crypto is you have open, transparent ledgers that are accessible to anyone, right? Now, what you need is basically an abstraction layer that accesses these ledgers on your behalf in order to clear the transaction, right? And that is all that Flexa is. So that means even if a transaction is instant, let's say, we have layer 2 transactions that are really fast, you will still need an abstraction layer that takes care of interchange, because a merchant doesn't want to bother swapping one asset against another. He doesn't want to bother if he or she can accept that one asset or the other asset. So there is a layer in between that makes sure the value is, a true value, and also takes care of compliance and stuff. Sorry, I've been speaking a lot, but that's kind of my view.
No worries, man. If you guys weren't talking a lot at the AMA, I'd be not a very good AMA. And so when a liquidation happens, for instance, where is it swapping assets?
So,
or maybe,
yeah, help me a little further with what you mean by swapping assets here, or rephrase that for me.
right. So I guess perhaps is the Flexa network exclusively for dollar transactions? Because I sort of assumed that it was like you could make a payment like in Doge, for instance, over the Flexa network, and it's using the AMP as the insurance collateral value, you could say.
Right. Yeah.
And so, like, if I made a transaction on Doge for Doge, and then the Doge price wildly varied, and then there wasn't enough collateral to back the transaction, is it selling AMP for like the Doge asset? Is it help me sort of understand that whole part?
So it may be best to just head into sort of the overview of what you can pay with and what merchants totally separately can receive with. So I always phrase it this way: with Flexa, URIs, consumers, we can pay with anything. We'll call that X. And then separately from that, merchants can also choose to receive and settle up in anything, which we'll call Y. So you could pay with Doge, or you could pay with like USDC or Bitcoin or whatever. And if the merchant wanted to settle in Dogecoin, sort of regardless of what you were paying with, they had that option that is there for them. Now, presently, that's not really the preference of merchants, is to just actually get paid and settle out in Dogecoin. But who knows? That future is a little bit closer to being enabled today. We actually, just before we started this AMA today, Flexa put out a tweet saying that if it gets 1,000 retweets, they will support Dogecoin spending across the network at all their retailers, which we managed to do in about an hour. So I guess not really an announcement, just something that happened 15 minutes ago. We will be able to actually spend Dogecoin across the network soon. So that's exciting. But to focus on settlement, most merchants actually, though they already have the option of settling up with any digital asset. It could be stable coins, it could be something volatile, it could be the same thing that you're paying in, or it could be something else. It could just be fiat. Right now, that preference is still predominantly fiat. That's just what makes the most sense for them and where their actual preferences are right now. So hopefully that answers your question about who pays with what and who decides what they get separately.
Yeah, and also Tangle, I'm gonna get you up here. I just want to finish off this question real quick. Sorry, I'm being selfish with the mic. So, but when the liquidations happen, Like say, okay, so I'm a merchant and I want to settle in dollars, and somebody is paying using their Doge balance, and then they pay a certain amount of Doge for equivalent dollar value of a service, and then during the time of that sale, that confirmation for that transaction, the Doge price wildly varies.
Right.
Is it, does it hit all the collateral equally, or is it like there's certain uh, partitions of AMP that would collateralize the Doge versus other assets?
Sure.
Yeah, that's sort of what I'm confused on, I guess.
Yeah. So, and first thing here, I would say we're not formally with the team, and this wouldn't be my biggest area of expertise. But essentially, we have what we call collateral pools or staking pools. So in the future, and as more things come online with this, you'll be able to stake your collateral to, say, for example, maybe it's the Flexa network, specifically to do with retail payments, or it could be something else totally different. It could be potentially staking the Flexa network with your collateral for cross-border payments, or maybe you're staking AMP as collateral for something else totally outside of Flexa, or even payments use cases necessarily. So depending on like what's being staked or what needs to be collateralized, there is going to be a different risk and reward profile that comes with each of these opportunities, generally speaking. Exactly what all that looks like, especially down to like the level of what a dashboard for that might look like. We're not there yet, but that's something I'm really excited about.
All right, gotcha. Awesome. All right, I'm gonna bring Tangle up. Let's see his question. Their question. Don't want to assume genders. Tangle, do you see the? I saw that you raised your hand, and yeah, there you go.
That work?
Tangle, we can't. Oh, did you hear Tangle?
Yeah, I can hear you, but
Oh, there you go, man. Yep.
you can hear
Go
me
ahead
now?
and ask your question. Yeah, I hear you
Yeah.
great.
Hey, okay. A couple things here in regards. You kind of touched on like what the merchant wants, and they can essentially accept any kind of payment. That's cool. Now, when you're speaking about fiat, do you guys have any kind of integration with institutions or banks or anything like that, or how that works for the merchant? They're actually receiving fiat if that is what they choose for.
So again, we can't really speak on behalf of the team, and I think a lot of information will be released soon when we see the next, wave of announcements and releases. We're actually waiting for the, official release of the SDK, which hopefully will happen in the next, in the near future. As for fiat, like real fiat on and off ramps, I think this is a question that is not, hasn't been really discussed very much at the moment, because at its heart, Flexa is a digitally native rail, right? So the idea is, I can't really say, I'm sure there will be solutions down the road, but like the focus is for Flexa to be the rail that will be used for digital assets. So it would be more the idea of a USDC or a USDT or even a Libra, using its rails, right? I think that is more the focus. And so right now there's no on and off ramp into real fiat that I know. Maybe I'm wrong, but I think the focus is a different one.
Okay. All right. Yeah. So you could be settling in stablecoin, and then it would be up to the merchant at that point to decide how they on
Exactly.
with
Exactly.
that.
And so the really exciting aspect in that is that once you use digital assets, right, a digitally native rail like Flexa just becomes so much more efficient, right? Basically, there's no way to compete with it in terms of speed, but especially in terms of cost, right? It can lower the cost tremendously that are that are coming with payment acceptance, right? We're looking at credit card fees of like 2 to 3%, but even further to that, the social costs that these payment methods create for countries like the States are tremendous, because there are costs involved with fraud. A lot of fraud that happens with cashbacks and credit card payments. So I think that's where Flexa really shines and has a tremendous value proposition that can really truly compete. And especially once we see these tokens come into the market that are designed to be spendable, right? Like Libra, like Acelo, like maybe Terra, or maybe like royalty points, projects like that, tokens like that. Once these tokens come into the market and really want to be spent, that's where you see the customer habits also change and really wanting to spend these assets. And that's where suddenly the whole landscape in what rails are used in order to do these transactions. That's why we love Flexa. That's why we are so fascinated about this project.
Yeah. Okay. Cool. That's a really good explanation on a lot of that. I do have a couple other things here quickly. When you're talking about swapping assets between, let's just continue using the Doge to USDC example. Let's use Bitcoin, because this will kind of tie both of my things in. So let's say somebody wants to use Bitcoin and and the merchant wants to settle in USDC. Where is that trade happening, or the swap happening between something like Bitcoin and USDC? Or let's even use ETH, and let's use the example of using ETH converting over to USDC. Where are those swaps happening for Flexa, and to give to the merchant for both examples, I guess, because one being outside of the ERC20 or ERC system with Bitcoin,
Right.
and then with ETH over to USDC.
Yeah, so that ultimately, if I'm understanding you right, that part of settlement, sort of strictly within digital assets, that's going to be done between Flexa and their exchange infrastructure partners, including right now Gemini.
Mm-hmm.
So that's kind of another entity that's in the picture that people don't always know or put in the picture for how the actual settlement goes in the background.
Yeah. Sorry. Yeah, exactly. So if you make the comparison to legacy payment infrastructure, right? You have the credit card networks that basically the only thing they are is they're an information network, right? All they do is to send information between banks, between the merchant's bank, between the customer bank, and take care of clearance, right? They are not actually settling the funds. The settlement happens on the background in the bank's ledgers, basically. And it's very similar here, right? You have a clearing system, which is a network that exchanges information, that makes sure the funds are correct, right? That takes care of interchange, which is the Flexa network, the clearing system here. And then the settlement on the background happens with the infrastructure exchange partners like Gemini, and maybe others that will join. So yeah, that's that.
Okay. So it's, you've got Gemini lined up. What about, so for example, when we're dealing with the ERC tokens, or now that, for example, with some of these other POS chains, where does Sushi come into this? Can Sushi be of use to you, to your platform, to be able to make those swaps happen as well? I mean, especially when it's ERC tokens.
So, man, I'm smiling, but I can't speak for the team on this. But just as a kind of a general role, the decentralized exchanges can play potentially for the Flexa network. By contrast, the decentralized exchanges is that they're kind of always out there. they're always on demand. And so when people are rewarded, so let's say you've got some AMP and you're supplying that to the Flexa network. And as reward for putting up that collateral, which cost you some money to acquire, your reward is that you receive a proportional cut of the processing fees generated by the payments network.
Mm-hmm. Okay. Yeah. So then it's just you guys choose at this point. You may choose more than just Gemini, for example. You could go and look at what's the best rate for that swap, essentially.
Yeah.
Is that kind of what you're getting around?
Yeah. So as you're paid back, or as you're paid your reward for putting up collateral, you're actually paid in the form of AMP tokens, and these tokens are bought back off of the open market at all times. So that could be through centralized exchanges. It could be automated. It could be happening automatically through Sushi.
I might add something to this. So AMP is the collateral that drives the network, right? As such, I think the quality that it should bring, or what would be interesting for the network, is for the collateral to be as liquid as possible, right? The more spread out it is, the more it will stabilize the network, right? The more it's used, on various platforms, the more it will help the network. So it's really about decentralizing the network as much as possible, in my opinion.
Okay. One final thing here in regards to just to understand more of the user, I guess, the user's interface and the interaction there. So with, so let's say you are looking at making an Ethereum transaction and using gas prices, you selecting the amount of gas and whatnot. So for the user, if they were planning to spend they want to spend ETH, what does that look like for the user in regards to, we have to use the AMP system? Is that meaning that they're depositing Ethereum ahead of time, or are they actually able to spend their Ethereum right from their own wallet? And then how does that interact with confirmation times and whatnot? So if somebody was to choose a lower gas price, what, I guess how does the interaction work there?
Yeah, man, there's a few things there. So first of all, to kind of piggyback on something that Appman said earlier, there is no particular Flexa app or the Flexa system. So there's not a Flexa wallet. So in the future, with the release of the SDK, which we hope is nearing, any app or any wallet can embed Flexa payments. They can import that functionality. So this could be your personal banking app. It could be a crypto native app. It could be your favorite wallet. It could be anything. They can all import that. So what it looks like in terms of you as the user potentially importing, I think that kind of comes down to what you're spending and what kind of wallet or app experience you're using. Now, if this is, say, a feature where you're just using your bank app and you're using, maybe you've got a balance in there of some, maybe it's a GUSD, or maybe it's we've got a stable coin or a CBDC in the United States at that point. So maybe that's the type of digital asset that you're transacting. But do you know that you're paying with crypto at that point? Maybe not.
If I can add something to this, it gets a bit complex, and we don't know all the details to that right now, because there's a huge difference between custodial and non-custodial wallets. So a lot of custodial wallets have exchange partners, right? And then they don't even, you as a user don't even need to set gas, right? And for the non-custodial wallets, I think the key strategy is to have layer 2 partners in order to really properly offer a solution there. But we also know, as far as I know, that was the latest that I heard, that the non-custodial SDK will come later, and the custodial SDK is primary now, right? So the idea is to launch with a couple of custodial wallets that have exchange partners. So the issue of gas is not an issue right now, or is not the question right now. But I completely and absolutely get your question, and I had the same one, and I think we still need to see more details on that.
Yeah.
Okay. Yeah, and that's good that you bring up the custodial and custodial, because I was going to tie into, I guess, the Bitcoin part of it as well. So, and I guess probably don't have the answer to this either based on information you have. But even, for example, like with Bitcoin, we can have, needing 6 confirmations. Curious on how many confirmations from a non-custodial wallet you guys would go with. I know that there's been some zero conf exploits that have happened in the past. So, obviously that's not an ideal way of going about it, but yeah, I guess there's more to still come and learn as this grows. But yeah, just curious how that works for timing for payments for the user end on a non-custodial sense. That'll come with time.
Yeah.
And
Sorry,
sorry,
go ahead.
you go ahead.
One thing I would add to that is just, and something I think people have to hear at least once when you're being introduced to Flexa, as opposed to pretty much everything crypto payments related prior to this, is that the way that we're transacting and moving value here and making these payments, this isn't at all, it's a distinct departure from historically the way that crypto payments have been talked about and how they've been approached, which is that we envision them as this peer-to-peer, on-chain, 8 confirmations, give or take, type of system. You pay a network fee, and all of that is kind of, the bread and butter of crypto payments. With Flexa, the vast majority of that is not just abstracted away from the user experience, but actually approached differently in such a way that transactions are instantized, if you will. And this is, in part by exploiting the use of a collateral system, so that let's say, traditionally in crypto payments, if you're trying to pay, maybe you want to just pay with some Bitcoin and actually send them Bitcoin in a store. This is, problematic for a number of reasons. Part of that is that it's going to take a lot of confirmations, and that's going to take a lot of time to finish. So we've known for a long time that pretty much any sort of peer-to-peer payments narrative like that, as far as being massively adopted by merchants, it's just it's a no-go, in terms of friction at the checkout, if not for other reasons. But with Flexa, using a collateral system, we're able to authorize payment immediately, so that payment posts, it completes, and confirmations are still resolving on the back end, right, as they normally would in their own time. And while that process is playing out, the AMP collateral stands by and is ready to liquidate should need be. And that allows the network to make, that promise to the merchant saying, should anything happen here or go wrong, we'll just liquidate, you'll be covered. So that's where the guarantee of kind of being fraudulent proof comes into play.
Okay, I think based off of what you just explained there and what we've gone through, I definitely have a better full understanding of what you're doing here. So, thank you.
I think
thank you.
one thing that I would love to add, I posted a thread that was a while ago about mobile payments in China. And I think that's really a way how everyone should look at this, because, China basically revolutionized their whole payment landscape within 4 years with their mobile payment system, which basically is a different version, another version of digital payments, but also pure digital payments that are incredibly low friction, right? And that cut out about 9 to 10 layers of intermediaries, right? And make a really direct connection between the customer and the merchant, and make the value transfer really seamless all over the country. And there are studies that show that it had a tremendous impact on their economy also. Which is something that we tend to ignore, or we tend to oversee that, what impact a new sort of payment landscape could have on economies, right? And now, if you take that model and you apply it to Europe, right? Why didn't it work in Europe? Why didn't it come to Europe and the States? In China, the whole information layer for the payment their payment network is basically centralized, right? So there's a big trust and a big security question there, right? But if you take that and you apply the decentralized and permissionless nature that crypto offers, I think that's where you have a really powerful business case, right?
Mhm.
Yeah. Also, I just wanted to thank Tangle for your questions. They were really awesome. Very, very, very useful and good for everybody to hear, especially people who maybe haven't read some of the Flexa docs before. Thank you very much, Tangle.
Yeah, you're welcome. Happy. Hopefully that helped everyone. Thanks.
Yeah, these have been great.
I also just want to remind everybody, if you have any questions, thoughts, concerns, or anything you want to bring up and ask, feel free to click the little hand at the bottom of the Discord group. You should be able to raise your hand to get in a queue, and I'll bring you up. So I wanted to ask you guys. Oh, this was something I wanted to touch on earlier that I forgot. So for Doge, are you guys using wrapped Doge, or is that like I believe it would have to be wrapped Doge because I think everything's on Ethereum, but I might be wrong on that. Feel free to
I
correct
think
me.
as long as you have an exchange partner that can
correct, yes.
facilitate the swap between Doge and whatever,
Right, that's
or a
where
network
Gemini
of
steps in.
exactly, or a network of exchange partners. You know, like then it doesn't need to be wrapped, right?
Yeah.
Yeah. Good points. Thanks for reminding me. I forgot about Gemini. I'll be honest, I did not realize. I knew that Flexa had some integrations with Gemini because I knew they had been using the GUSD before, but I didn't realize that they were doing swaps through Gemini. So
Yeah, Gemini is definitely a partner, capital P, for Flexa, and has been, I mean, one of their earliest in the entire adventure so far. And in fact, for anybody listening or who just doesn't know yet, if you have the Gemini app or if you download it on your phone, they have a feature in there called Gemini Pay, which is powered by Flexa Payments. It's got like all of the same functionality as the SPED proof of concept app that Flexa circulates. So if anybody wants to actually try Flexa Payments, like at a major retailer somewhere in the US, you can just download the Gemini app and make use of the Gemini Pay feature. And you can kind of see what it's actually like at a much simpler level, instead of up here in the clouds with all this talk.
awesome. I'm just gonna get some people in who raised their hands. Ample opportunity. Yep, there you go. Go ahead and ask your question, man.
Yeah, hi, thanks, guys. I was just curious about at the time of settlement, if you have a volatile underlying asset, is there any risk of price arbitrage when you're going to the exchange, like to like do the settlement or do the like if there's a difference in the price of the asset and who absorbs that risk, or what happens in the event that there is, or is it so instantaneous that that's not really risk?
Yeah, I appreciate the question, and I think I had alluded answering this for Magic Turtle before too. So thanks for bringing that up again. So without speaking, let's say authoritatively to the technicals of this, my understanding is that the simple answer is no. There's not really any risk here for arbitrage or anything like that. A snapshot taken at the time of is pretty much all that's required to do that, and to have a consensus of what the price was at what point of time, and from there everything else can be moved forward through pretty easily. It's a pretty common question, but it's not an issue that hangs in the balance.
All right, awesome. Thank you. Ample opportunity. And we got some more questions. Got the green guys. Gonna send you a request. There you go.
Awesome. Hey guys, how you guys doing? Oh man, this is an interesting time. I'm super amped up, and I appreciate just this whole entire group. We have a Facebook AMP group, and where there's Discords and sushis and just
Cool, man.
everything. It's just it's just amazing stuff, man. So my question is this: from a consumer's perspective. So if we're using Spedin or Gemini Pay or whatever we're using, and for whatever reason we get hacked or we lose our phone and somebody is able to access our funds and be able to spend, let's say go to Lowe's, they find our phone, we lose it, they find it, they go into Lowe's, for whatever reason they're able to get in there and make that spend and use our funds. How are we protected as a consumer? Like if you were to use fiat and you were use MasterCard and somebody steals your card and they go use it, there's fraud protection for the consumer. What type of fraud protection is there for a consumer? I have another question after that too as well.
So maybe I can quickly touch on that. As far as I understand, and that's again very similar to the legacy payment network, is you have the wallet that takes care of KYC, for example, right? And that also takes care of security. So if you have a wallet, let's say you use, I don't know, MetaMask, which in this case doesn't apply because it's non-custodial. But anyway, you have like a security system, you have your PIN, you have your seed phrase, whatever, right, to access your wallet. And then you have the wallet that uses Flexa Rails in order to spend. Now, Flexa Rails in itself need to provide a minimum of KYC, right? Which is similar to Visa and MasterCard. Like Visa and MasterCard require their banking partners to provide KYC, which is encrypted, right? Like nobody's supposed to be able to read it. But in order to use the Rails, you need to make sure to abide to a limited set of, compliant regulations. And in terms of security, I think it's really similar. Like the wallet is who you need to turn to in terms of, if you lose your phone and who can access it and that sort of stuff, right? Flexa makes sure that if on the transaction level there's for some reason a transaction fails or is fraudulent, that the collateral jumps in. But I think that doesn't apply to your wallet and your phone. In my opinion,
Sure.
That's how I understand it. I don't know what you think, Lumi.
Okay. Actually, you kind of answered the second question anyway, but thank you guys. I appreciate it.
Yeah, thank you.
Awesome. Thank you, green guys.
Yep.
And we got Luna614.
Hey, can you hear me? How's it going?
Yeah.
You sound great.
What's going on?
Hey, Louis. First of all, I'll say thank you to both. Learned a lot over the past couple of months from both of you. I have two primary questions. One is they're both go-to-market questions, I guess. Consensus, CodeFi, obviously co-developer of AMP, but they're also, I guess, aggressively marketing toward central banks and big banks in terms of trying to, have like a centralized solution, kind of really promoting MetaMask and Ethereum and their kind of their platform. How do you guys view that solution versus Flexa? And then also, what's like the typical sales cycle for Flexa when they like go to merchants, like when they go to Best Buy or Lowe's? Like how do those discussions kind of evolve? And who are they talking to, etc. If you guys know.
Yeah, so for the second one, I probably wouldn't be able to help you with that one, even insofar as I maybe have a clue. I would just not be able to share with that. But with respect to consensus and CBDCs and the Flexa network, this has definitely been something I've seen a small handful of people in the community kind of taking note of, being curious about, like, is there a relationship there? Would it make sense? I think, first things first, consensus is a really, really huge entity in the space. They're like one of the biggest, the oldest, and they have their hands in everything because they're just consensus. So that disclaimer being aside, I see anything that consensus is doing with CBDCs to be perfectly compatible with Flexa. and ultimately just its own source of validation for Flexa, just from a different angle or a different part of the infrastructure. So like, okay, if we are going to be leading out with CBDCs and adopting that sort of infrastructure, then obviously we're going to need digitally native, rails for moving everything across. So it makes sense. I see CBDCs, generally speaking, as more of just a validation of what's to come infrastructurally. And as for consensus, working with any particular central banks or particular CBDCs, nothing that I'm aware of being like an official on the roadmap there between Flexa and consensus. But also in the same breath, I mean, I would definitely never be surprised to find, pretty much all of the eventual CBDCs to be running across the Flexa network, because really, why not?
Yeah, maybe. I mean, I'm the same as Lumi. I can only speculate here, right? Like there's no like insider knowledge or anything when I speak on this. It's just my own opinion, putting pieces together. But we know of Flexa being included in the pilot program in Hawaii, right? Like next to Novi, where they're piloting using different forms of digital payments on a national scale level, right? And so, just from my own opinion, I think whenever we talk about CBDCs, we will also need digital rails, right? We don't know in how far the programs of Visa and MasterCard go in terms of really rebuilding the real core architecture of how transactions are done on their networks. But if it's anything like they are today, which would require like rebuilding a ship on the open ocean, kind of, if it's anything like today, I think like a real digital native rail would be immensely empowered by any sort of CBDC, right? So that's kind of just my own opinion, and I think we see signs pointing towards that. But apart from that, there's nothing I can also share.
No, I appreciate that. Thank you both.
Yeah, thank you.
Awesome. Thanks, Luna. And we got Red in Hawaii.
I'm loving the steady stream of questions here today.
Yeah,
yes,
it's
can
great.
you hear me?
Yeah, we hear you great.
Yeah.
Aloha from Hawaii.
Aloha.
Hi there.
Sorry for some real neophyte questions here. Just getting into this system, it's really exciting. Probably one of the first things that I would ask is, I don't want to sell or spend my altcoin, my AMP, because I think it's going to become more valuable in the future. When do you see these valuations of cryptocurrencies kind of leveling off so that people will be spending them rather than trying to hold on to them? Because right now, I think it's 90% of all coins are held for speculative purposes. Is that a reasonable question?
Yeah.
Sure, that's a good question. Yeah, really good question.
Okay, thank you.
Sounds like an underestimation of the speculative market.
Yeah, I would just jump right at it and say 99% of all holding of digital assets is definitely to speculate on. Which brings up a fair question. I would kind of probably start by kind of reframing the goalpost a little bit here for what I think or believe is going to drive adoption and what adoption is really going to look like. So for us coming into crypto payments, naturally, like as consumers, and that being our frame of reference, we think about adoption and we wonder how it's going to come to pass. We from the ground up, we wonder like, what's in this for me? What's going to get me to do this? What's going to get me to download this app? Or what's, for example, going to get me to spend my Bitcoin that I'd really probably rather speculate on? And this is where the narrative kind of gets a little bit more complex than what we've been used to for the last some years. And for, for good reason. Like payments is the original crypto use case. Bitcoin's like the first line in the Bitcoin white paper is, Bitcoin peer-to-peer electronic digital cash. So it makes sense that we still think about, Bitcoin as sort of maybe the face of crypto payments. But I think in actuality, the way that mainstream crypto payments adoption is really going to kick in is something, I think we usually agree on. Like, in order for crypto in any iteration, any type of use case to really find true mainstream adoption, it's got to reach that level where it's kind of happening invisibly. It's just being kind of woven into a lot of the existing user experience or financial infrastructure that we're already used to. So, for example, now we already have, in a very literal sense, like we have tokenized USD, right? It's just not an official, crypto blockchain USD. But it is technically, like, it is tokenized. It's on some arbitrary ledger, and fortunately, like, none of us know anything about this, and we don't have to, and we never go into stores, and we never have to think about or ask anybody like, hey, do you accept tokenized USD or whatever. Like, that whole learning curve, which, like, for us who are in the crypto space and are crypto natives, like, we're familiar with that, and we have all of our reasons for digging into it and wondering questions like this about it. But for like real mainstream adoption to happen like at scale, obviously, like, nobody is going to be learning about like any of this stuff, just like nobody learned about the way that digital USD and payments using that already work, using a tokenized infrastructure. Like, nobody even knows that, right? So I think that's kind of just to flop the idea around there a little bit. I think when we really talk about crypto payments and that kind of kicking in, I think it's largely going to be the invisible use of crypto payments. And it's awesome that you will always have the option to pay with like whatever, like any digital asset. And merchants, again, also already have the option to receive and settle out with any digital asset. Like, it's good that you have those doors open, but more practically and more near term, that's kind of that's where I see crypto payments really going, rather than what's going to get us to at some point decide that actually we do want to spend our Bitcoin. I have a little more faith in the former.
If I can add on that, I think there are two things that might be also interesting, worth mentioning. One being, look at the Terra landscape and how they managed to really come up with a surprising and really powerful set of incentives that drew in an immense amount of people, right? And right now, the Chai is actually, in terms of users, active users and active spending volume, one of the, if not the most successful payment app in crypto right now. And they did that by offering a 10% cashback when you use Chai for payments, right? And so that created real volume and real throughput by users that are not crypto native, right? Just using Chai as their main payment option in store. So that's one thing that I would like to mention, because going forward, I think we don't really see what incentives there will be, but I think we are looking at like a whole landscape of incentives that will bring consumers into this space, not in terms of speculation, but really in terms of like real usage. And the other one being that I think a lot of opportunity comes from brands and big merchants binding their customers closer to their applications and their payments app through like royalty points and gift cards and stuff like that, digital gift cards. And so these are like tokens that I could also see really fostering the idea of spendability, right? I think right now we're not in the space where we see spendability as the one use case, because what we are building right now is the base layer infrastructure, which is the real core hard value, right? Like Bitcoin. And that base layer value infrastructure will drive all the further layers that are built on top of it, right? And spendability only comes later. But going back to your question, that is basically the most important question when it comes to, wide scale adoption of Flexa, because on the merchant side, the business case is, very tangible and very strong. On the consumer side, it's a bit more, blurry in terms of what road will lead to this future. But I'm really positive that we will see quite a bit of movement there very soon.
Okay, wonderful. One other quick question is, it clearly, the U.S. currency, because it's been the central, the reserve currency of the world, is fairly stable. People will use it to spend. They recognize it as its value. Whereas places like Venezuela or Nigeria, they're trying to get the heck out of their currency. And that's where it seems like the early adoption of digital currencies or digital value, spendability, I believe is the word you used, comes into play very quickly. So are there any areas that we might look to for green shoots to see how they're adapting or are using those to monitor this a little better? But I also really appreciate your concept of the merchants can entice through reward systems as well, the use of digital payments. So I think that's a good possible green shoots area too to look at.
Yeah, I think it is. You'd mentioned kind of some sources of maybe inspiration or kind of where to see crypto already in use. So I'm thinking right now about M-Pesa, which is not a crypto, but it's sort of it's a story we talk about a lot in crypto. And just like in general, when I think about kind of the original mission of how many people have we unbanked, Africa just always comes to mind. So again, I'm thinking of M-Pesa. I'm also thinking of Silo, which is a base layer who I'm personally really interested in, and they're a blockchain project that comes to mind for me when we think about who is kind of who's out in some of these other regions, specifically like Africa, and working on getting like actual adoption to work, like actually using blockchain to power cross-border payments and just like make a real impact rather than some of the stuff that we're focused on here and talking about today, like retail payments in the first world with Fortune 100, Fortune 500 companies, etc. I think we are in a stage where we're actively learning from what's going on in Africa, especially broadly when it comes to like cross-border payments. That's not something that Flexa has touched on too much to date, although they have just a little bit, maybe enough to indicate that that's a direction that the payments network will probably at least dip their toes in the water at some point in the future. But for the time being, I think, as Adman had already mentioned, Terra and Luna are probably a more spot-on point of comparison, and that this is, the power of blockchain for use cases of payments, and specifically within retail. So I would just kind of X2 that and say that everything that Terra has been doing with Chai specifically has been really awesome.
And I just wanted to thank you guys for your time here in this chat. I look forward to learning more and listening in again. Thank you very much.
Yeah, thank you.
It's been a pleasure.
Thank you very much, Red and Hawaii.
I'm surprised at like the level of discussion and the questions, like really spot on, like great stuff.
Yeah, and it's we're nearing up on like an hour, so yeah, we're gonna look to wrap up pretty soon here. But Mike, I saw you with your hand up, and don't feel like rushed to ask your question. Feel free to talk about it, but just letting everybody else know.
Yeah, with Flexa, we often talk about accepting crypto payments, but from my understanding, it can also be used to power fiat to fiat. So I'm just kind of curious to hear more about that use case I know you spoke on the cross-border payments. Just kind of want to hear you all elaborate on Flexo's role in fiat to fiat, different currencies.
I can only speculate on that right now. So fiat to fiat, if you're saying not stablecoin, but like true fiat to fiat, depends on banking partners and exchange partners. And that use case will definitely come along the way. Right now, I can only speculate on that. Unfortunately, there's nothing else I can give you. The only thing that I can say is that, using USDC, you can, in theory, already pay fiat to fiat, but just like fiat back. But there's nothing that I know of or I can share where there's concrete information of something that will happen right now. Just in theory, it's definitely possible and depends on like fiat on-ramps that, of course, always ends up being legacy infrastructure.
Gotcha. Thank you.
All right, awesome. Thank you, Mike. Just like, I guess, one last check. I did see one person who was raising their hand and then putting it down and then raising it up. But yeah, if somebody wants to ask one last question before we wrap up. Oh, see Ivan. All right, Ivan.
Yes, my question. Oh, first, thank you guys for this chat. Quick question. Do you guys see any other big custodian wallets joining the network anytime in the near future?
So I could only really speculate on this. There's nothing, of course, that I'm like aware of and trying to hint at, but it wouldn't shock me like at all. That's kind of what is probably the most promising about, or the most exciting about releasing the SDK soon, finally, hopefully, is that once that cat is out of the bag, like any app or any wallet that wants to offer their users the ability to pay with digital assets and make Flexa payments, like they can all do that. It's up to them at that point if they want to do that. So let's take, for example, like a PayPal or say like a Coinbase. Let's say that either of them as huge apps or wallets with a huge user base, if they decided that they wanted to use Flexa payments, I don't think that they would even really, I mean, they probably would, but I don't know that they would even have to really like speak to the Flexa network necessarily, or at least that's kind of the goal in an original design, is that over time, the ability for anyone to leverage Flexa payments and embed them in their own app or wallet experience is so free flowing that, for example, like maybe a Coinbase could go ahead and just do that and they wouldn't even have to talk to Flexa. More likely they would talk to each other, but that's kind of what I understand about how they kind of originally envisioned developing the network and being able to kind of push in that direction to where it's trust minimized, let's say.
Perfect. And another random question. I mean, I know that you guys can share that, but is the SDK coming soon, or like we have thinking Q1, Q2, Q3?
So it's definitely coming soon. Exactly when, I couldn't say. It's been coming soon for, I don't know, let's say at least a month here. We are optimistic that the team's got a 3-hour panel at Consensus in late May here. That'll be kind of our next big point of communication with the team. Surely they'll have some kinds of updates for everybody in the community when that comes around. I want to say that's on the 26th of this month. So for anybody who already has a Consensus ticket or is thinking about getting one, we'll definitely have a lot of updates from the team then.
Perfect. Thank you. Appreciate it.
Awesome. Thank you, Ivan. And okay, I don't want to keep you guys forever, but we have one last question from Zedix or Zedix. I just hate missing people's questions.
Oh, me too.
Hi.
Hey, Zedix.
Can you hear me?
Yep.
Loud and clear, brother.
Thank you very much. Big shout out to the Flexa team. And I want to ask you guys, when are you guys going to come to basically UK? And are you going to be listed in any other exchange? like Binance or Coinbase?
Yeah, so for exchange listings, the team cannot or will not, comment on those coming up, unfortunately. But what's new? As for expansion to the UK, I want to say this has been discussed. I want to say maybe even implied as probably near up or next up on the roadmap for international expansion. Maybe don't quote me on that, but I think that that's been implied through slides and stuff at different video conferences we've had.
Oh, thank you very much. And one last question: do you guys give any incentive, like if you know any retailers that want to get into this SDK, I can refer someone? Would you guys give any incentives?
Sure. So already, and I believe this is still ongoing, but for the entirety of 2020, there was I'm not sure what they called it, a COVID-19 a discount basically. So any new merchants that the team was signing with for the entirety of 2020, Flexa agreed to waive all of their payment processing fees as part of that, as an onboarding incentive there. So that was a nice timely move there. As far as like further incentives beyond that, I don't know. I think more so the incentive sort of is the product itself in this case. So it's kind of a, hey, I've got something you want, and they're like, oh yeah, you do, rather than, hey, we've got to get you guys to try out our stuff so much. I think the conversations flow more organically, and we arrive at kind of a mutual interest there between Flexa and retailers.
Thank you so much for your time.
Yeah, thank you.
Thank you.
Awesome. Thank you, ZX. All right. Well, I think this is a good place to start to wrap it up. Lumi and Atman, thank you guys so much for coming out to the sushi community and
cool.
answering all
Thanks,
these
man.
questions.
Thanks for having us.
Yeah, thank you so much. This was awesome.
Yeah, this was one of the best AMAs for sure. Lots of questions.
Yeah, I had listened to a few of your most recent ones, and this one definitely impressed with the amount of questions and the consistency of some really smart questions. So thank you everybody for coming out.
Yeah, and so if people wanted to look into AMP and Flexa, what are the social media accounts or websites that they should go to for information, just for the audio listeners?
Yeah, so if you're on Twitter, you can follow at AMP Token or at Flexa HQ. And if you're looking to go to their websites, you can go to amptoken.org or flexa.network.
Awesome. All right. Thank you guys so much for coming out, and I hope you have a great rest of the week. Yeah, I think it's
cool.
It was a great AMA.
Thanks, man. Take care.
Yep. Thanks, everybody.
Talk to you soon.
Thanks, everyone. Stay safe.
Everyone.
Take care.
Bye.